Good morning students, welcome back to the class 11 subject accounts, and we have started our new chapter considered as depreciation. In that we have studied about the introduction of depreciation, and we have seen the features of that depreciation and different points we have studied in last video. In today's video we are going to study about the methods of depreciation. There are two types of methods. We will discuss about that, and then we will solve two questions which are simple and easiest ones. So if we do that two questions very thoroughly, then we will solve out the depreciation questions very easily. As earlier also I have uploaded the image of that question and solution. In today's video also I will do that the same thing. I will take a photograph of that particular question and solution, and it will be uploaded under the description of this video. So let's begin with the question. Before question, we will start over the method. The first method of depreciation. Method of calculating depreciation has two different methods. One is straight line method and another is written down value method. Both methods are different and both are having different features. So let's begin with the straight line method. Straight line method. Straight line method can be known as fixed installation method or original cost method. The name itself says that straight line method. Straight line means once you have taken the specific amount, that amount will be repeated every year. It is considered as straight line method. In this fixed method, the amount of depreciation is fixed every year. It has been mentioned in point number 2. Now, it is easy to calculate because the question itself has the image of it and it will be carried forwarding towards the answer. Here, once you have calculated the depreciation amount will be fixed and it will be carried forward every year. It is considered as straight line method. Whereas on another side, it is a written down value method. Under this method, we have another name like reducing balance method, diminishing balance method. Here, the amount of depreciation is not fixed. Be careful with the word. The amount of the depreciation is not fixed. Here, the amount of straight line method is on the particular machine, whereas in this case, here the depreciation is always getting diminished. Diminished means declining every year. Here the depreciation is not fixed. Here the depreciation of calculation of the depreciation is difficult, where the amount can come in points also. The amount can come in decimal points also. So you have to calculate very carefully that the points can make a differences in the selling out or purchasing a new machine. Here it has been said that in written down value, the value of that machine is being depreciated on the book value. What is book value exactly? After every year, after deduction of depreciation, the amount remains is considered as book value, and that book value will be charged again and again. Once the value is getting zero, the depreciation will be considered as full satisfied with that particular machine. Here I am having one formula. In that, in last video I have told you the estimated net residual value has different names. So I have written net scrap value. Scrap value is acceptable. Then I can say that it is also been known as residual. Then it can be a salvage or it can be a break up value. That must has to be there. Now, how we can calculate depreciation? Depreciation is equal to cost of assets, actual price of that machine, minus estimated net scrap value. Net scrap value can be judged by the book value itself. That scrap value has to be written over here upon number of years of expected life, how much years that particular machine can be worked out for the organization. This much has been depreciation. These questions can be coming for 1 mark or 2 mark to write in detail. Now, we are going into the question. Before that, you should learn this formula: cost of assets minus estimating net scrap value upon number of years of expected life. This formula is necessary to understand and remember for a solution. Now, let's begin with the question. I have written 2 questions over here, as already said, and I will take a photograph and make it under the description of this video. So let's begin with the question. Question number 1. The original cost of the assets is 5 lakh. The used life of an asset is 10 years, and the net residual value means net scrap value. Net scrap value is estimated of 1 lakh rupees. Now the amount of depreciation to be charged every year. So here we have to make 2 different formulas. One is this and another I will show you while doing solution. Whatever the information we are having, we have to write over here and then we will apply the formula. Let's begin with the term. I'll write the formula for depreciation, calculating depreciation. So depreciation is equal to cost of assets plus estimated net scrap value upon number of years of expected life. Not plus, but it is minus. I have made a plus. It has to be written as minus. That in question it has already said that cost of assets is 5 lakh, expected life is 10 years, and estimated value is 1 lakh. So all information has been provided over here. So what we will do, we will calculate the depreciation over here. Depreciation is equal to 5 lakhs minus 1 lakh upon 10 years. So you are great in calculation. So we can do that as 4 lakhs upon 10. 0 gets cancelled. The actual depreciation you are charging as 40,000 rupees in straight line method. So we can do one more thing. We can find the exact percentage. So how we can find this percentage? By doing this formula, we can find the exact percentage or rate of depreciation can be found over here. So what I am writing, just concentrate on this rate of depreciation is equal to amount of depreciation. Be careful with this term. Amount of depreciation upon cost of assets or acquired cost. Both are same. So I am saying that cost of assets. Please do not get confused in notebook. It can be written as acquired cost. Acquired cost means cost of assets. So what we will do, we will calculate this now as 40,000. Here one more thing has to be written. It is multiplied by 100. So I am not able to write this, so I will rough it and make it smaller, so it can be understand. Amount of depreciation into 100. If we put this formula correctly, then we can find the exact rate of depreciation. How the rate will be calculated? Just look into it. 40,000. Cost of assets is 5 lakh. What we can do a cancellation over here. So into 100 is also being left. 0 cancel, 0 cancel, 0 cancel, 0 cancel. 1, 2, 3, 1, 2, 3. Then we are having a remaining part as 40 upon 5. As you know table better than me, so it will be considered as 8%. The rate of depreciation every year has to be charged as 8%. So this is considered as rate of depreciation. I hope you will practice this at home for your benefits. It will take 1 mark or 2 marks. According to the question, it is being framed. Now, we are going into the next question also. I have written a little bit smaller, so you should be understanding this. If in this question I have been mentioning something, so it will be beneficial for you. Here it is difficult to calculate the amount because it is the written down value. As I already told you, the written down value means you have to make a depreciation charge on book value. Be careful with the word book value. When it comes WDV or written down value, you have to remember book value. Be careful with this. Now, second question, the original cost of the assets is 2 lakh rupees and depreciation is charged at 10% per annum at written down value method. Here in this question, it has been said that cost of assets is 2 lakh rupees. Hope so it is visible. If not, then don't worry, I will make a snapshot for you. You can check out that question also. Now, it has been said that the depreciation is charged at 10% per annum. Per annum means yearly. Okay, be careful with this. Per annum means yearly. Now, what I will do, if no information has been given in the question, we have to calculate minimum 3 years of depreciation. In question, if nothing has been mentioned, we have to calculate depreciation for 3 years. Be careful with this. So I will do the thing one by one. So I am writing first year. In that, I will calculate the amount of 2 lakh rupees and 10% depreciation. Then I will minus that amount and make it down and down to level 3. Okay, 3 years I have calculated. So let's begin with the 2 lakhs multiplied by 10 into 100. 0 cancel, 0 cancel, 0 cancel, 0 cancel. That means 20,000 depreciation has to be reduced. So what I will do, 20,000 I am writing here. Now, while calculating, be careful with this. On first year, we are having 2 lakh rupees. Then what will be happening here? We have to calculate 2 lakhs minus 20,000 as is equal to, now the book value will be 1,80,000. It is considered as WDV, written down value or book value. Now our book value is 1,80,000. Now the second year has been completed. Now we have to calculate the amount, not 2 lakh but 1,80,000. So here I am writing 1,80,000 multiplied by 10 divided by 100. 0 cancel, 0 cancel, 0 cancel, 0 cancel. That means now the depreciation will be charged as 1,800. As you can see the differences between the term of written down value and straight line method. as I have not done the straight line method, but how to calculate the straight line method I have mentioned in the question number 1. So now we have to go with the WDB concept. In that we will depreciate the amount. The formula I have not written here, but I will tell you orally what is the formula. The cost of assets or book value minus depreciation is the formula to calculate the written down value. Now, here I am doing 1,80,000 minus 1,800. So the new written down value will be 1,70,60. 1,62,000 is the amount for the second year. Now we are going to the third one. Now in third year, again we have to charge depreciation on book value 1,62,000 into 10 upon 100. As I have taken 10%, that means it is an easy one, but when you go down, the amount will be difficult to calculate. Let's go with this again. 20 cancel, 20 cancel, the amount is 16200. Now, as I said, if information is not given, we have to calculate the amount for 3 years. I am doing that and I will close it down. Written down value or book value is 1,62,000 minus 16200. Now we have to calculate this and the final answer will be upward. Here it can be said that 800 where minus 6 is equal to 6, 5, 1, 156,800 will be answer. Not 5 but 4, I think so. Yes, 4. 4 will be answer. If you are not sure, then do it as a rough and calculate that 0, 0, 0, 3, 1. So I am not sure that I can calculate it. So the answer will be 1,45,800. 1,45,800 is the book value for the current depreciated amounts. So this much can be done by your side. In this question, the term has been clearly mentioned. In next video, we will solve the exact what is depreciation, how to pass the journal entries, and then we will see how the ledger has to be made and how the entries will be passed for straight line method. And then if time permits or if we have time, then we will go with the straight line method right along with that written down value also. I hope you have understood the concept very well. That's it for today. Thank you.